This is Income Taxation class, Chapter 5, Income Tax for Corporation. I am Romualdo Fernandez Credo, your teacher for this semester. Please get a pen and a paper for your notes. So if you are ready, let's proceed. So previously, we learned that corporation can be classified into two generally. They are domestic corporation and foreign corporation. However, yung foreign corporation can be subclassified into resident foreign corporation and non-resident foreign corporation. So let's begin our discussion with the rules on domestic corporation. So the following rules will apply on domestic corporation. So what is domestic corporation? Domestic corporation is a corporation that is organized or that was organized under the Philippine laws. So if it is created using the corporation code in the Philippines, then it is a domestic corporation. However, if the corporation was organized using laws other than yung sa Philippines, then it is not a domestic corporation. It is a foreign corporation. So please take note of that. So let's discuss the sources of income of a corporation. So for domestic corporation, the income is taxable regardless where it was earned. So it is taxable within and without. So ang tawag nila doon ay yung corporation is tax global. Kasi kahit saan manggaling yung income niya, dito man sa Philippines or sa other country, it is still taxable kasi siya ay domestic corporation. However, for foreign corporation, of course, ang kanyang taxable income lang is yung income na na-earn in the Philippines. Pag ang income ng corporation ay na-earn outside the Philippines, then hindi na mag-a-apply yung ating tax rules due to territoriality. No? Hindi na jurisdiction ng Philippines yun. So yung rules sa Philippines will not apply, of course. So this is the summary of what we have discussed in the previous slide. So para magkaroon kayo ng mas clear na picture, no? So a corporation that is domestic, its income is taxable if it is earned in the Philippines and even if earned outside the Philippines. So lahat ng income niya taxable as long as hindi exempted. For foreign corporation, kaya resident yan or non-resident, ang kanyang taxable income lang is yung manggagaling sa Philippines. Just like what I've said sa previous slide. So para mas visible lang dito, mas maganda, mas magigets nyo yung kapag naka-tabular presentation yung sinabi natin kanina. So for history purposes, ito yung evolution ng ating tax rate. So from 35 naging 30%. So itong mga changes na ito ay of course ay amendment sa ating tax code of the Philippines. So hindi pa naman nababago yung ating tax code, yun pa rin naman ang prevailing. However, mayroon ng maraming revisions. Mga rates binago, mga sections binago. So, marami ng changes, marami ng amendments. Pero still valid pa rin yung ating, may mga certain portion lang na nire-revise o pinapalitan, ina-amend ang tawag. Pero yung in general, yung corporation code, yun pa rin naman ang law na mag-a-apply sa Philippines. So ito nga. So from 1997, 35% siya, and then nag-decline, naging 34 noong 1998, naging 33 noong 1999, and then from 2000 to October 2005, 32%. November 2005 to 2008, 35%. And then ng 2009, 30%. So, na-notice nyo, nagdi-decline siya hanggang October 2005. At saka, lumaki siya ng 35%. Actually, time yan ni President Gloria Macapagal Arroyo. So, kailangan, at that time, kailangan daw ng taxes para sa government. Kailangan nila ng collection ng taxes. So, kinausap niya yung mga businessmen, mga ganun-ganun para pumayag sila, nataasan ang tax rate, ang corporate tax rate from 32 to 35%. Pero ang promise niya is ibababa niya sa 30% after ng ilang years. Ayun nga, naibaba na siya ng 30%. However, hindi pa natatapos diyan kasi ang current government ay may plan to reduce further yung ating tax rate from 30% to 20+%. Hindi ko alam kung anong exactly kung ipapantay nila sa mga neighbors natin, neighboring Asian country natin. Kasi tayo na lang ang pinakamataas dun sa region. For example, yung Singapore nasa 20+% niya, Malaysia nasa 20+% na lang din sila. So, malaking disadvantage yung mas mataas na tax rates sa pag-attract ng foreign investor, yung mamumuhunan sa bansa. Siyempre, isa sa mga i-consider nila kung saan sila mag-i-invest ay yung tax na babayaran ng company nila. So, para mas maging competitive ang Philippines, ibababa daw nila yan sa 20+%. So, napansin nyo, itong corporate tax ay isa lang. Hindi siya katulad nung sa income tax na graduated. Na graduated tax table ang gagamitin, no? So, mayroong range. So, ito, one rate lang. So, for example, today, since ang prevailing ay 30%, so 30% ang gagamitin natin. So, these are the tax na babayaran ng domestic corporation. So, una, we have yung final tax on passive income. Meron din yan sa individual, di ba? Yung final tax, yung sa interest, royalties, winnings, etc., etc. So, parang ganun din yon. And then, meron pang capital gains tax. Parang din lang sa individual yan. Pag nagbenta ka ng shares of stock, and then, pag nagbenta ka ng real property. Tatlo is yung tax on other income. Yan yung tinatawag nating regular tax or normal tax na naka-pin at 30% na ngayon. Hindi natin alam kung hanggang kailan niyang 30%. Any moment, baka may ma-repeal ulit ang magkaroon ng amendment pala sa ating magkaroon ng amendment. Hindi pala repeal. Magkaroon ng amendment sa ating tax code at papalitan na yung 30%. So, yun yung tinatawag nating normal tax. And then, beginning sa fourth year ng operation ng business, mag-a-apply na yung minimum corporate income tax na 2% of gross income. And then of course, mayroon pa ring gross income tax para sa corporation. So yun yung mga taxes for domestic corporation. Okay, so based dun sa previous slide, sinabi ko na ito, no? Na for domestic corporation, beginning on the fourth year immediately following the year in which such corporation commence its business operation, when the minimum corporate income tax is greater than the tax computed using the normal income tax rate, a corporation shall pay yung minimum corporate income tax na tinatawag. So, ulitin natin. So, beginning sa fourth year of operation. So, year 1, wala pang MCIT. Regular tax pa na ang babayaran niya na 30%. Year 2, wala pa rin. Regular tax pa rin. Year 3, wala pa rin. Regular tax pa rin. Pero sa year 4, aside from yung regular tax, 30% ng taxable income niya, so multiply mo yon yung taxable income niya, kunwari, na-complete na. Gross income minus allowable deduction. Nabawas na. So, mayroon ka ng taxable income. So, multiply mo na ng tax rate na 30%. So, yun na yung kanyang normal tax. So, sa fourth year, hindi na lang ganon. I-determine mo na kung magkano yung minimum corporate income tax, which is 2% lang naman ng gross income. So, kunin mo yung gross income, i-multiply mo ng 2%. So, i-compare mo silang dalawa, yung normal tax or NCIP, at saka yung minimum corporate income tax na 2% or NCIP. So, ang babayaran mo doon ay normal tax kapag mas mataas yung normal tax sa MCIP. Ulitin natin. Ang babayaran mo ay normal tax kapag mas mataas yung normal tax sa MCIT. So, what happen kapag bumaba na yung normal tax sa MCIT? Ibig sabihin, mas mataas na yung MCIT, yung minimum corporate income tax. Anong gagawin mo? Siyempre, ang babayaran mo na is yung minimum. Kaya nga tinawag kasi na minimum yun. Dapat yun ang pinaka mababa mong babayaran. So, don't worry. Yung excess naman, pwede mong i-claim. Anyway, illustrate natin yung pag-claim sa next lesson natin. Kung paano. Mas maganda pag mayroong figure. So, let's go sa rates of tax on certain passive income. So, ito na yung tinatawag natin final tax on passive income. Number 1, interest from currency deposits, trust fund, deposit substitute, and other similar arrangement received by a domestic corporation. So, ang tax rate is 20 or 20%. So, sabi ko nga nung discussion natin nung individual taxpayer, ang problema lang dito sa final tax on passive income is maraming rates. Iba-iba ang rates. Pero pag sa computation ng tax, mas madali kumpara dun sa computation ng tax, ng regular tax. Kasi ang dami-dami pang step nun. So, for example, naka-earn ka ng interest na 100,000, they times 20%, yun ang final tax niya on passive income. Number 2, royalty from sources in the Philippines, ganun din, 20%. So, kung magkano yung royalty times 20 royalty income ng corporation times 20%. So, please take note, hindi katulad sa individual, mayroon dalawang classification ng royalty at magkaiba yung kanilang tax rate, di ba? Yung other royalty is 20%, pero yung royalty on books, literary works, and musical composition, it is only 10%. Pero syempre, yung isang classification hindi available sa domestic ay sa corporation. Bakit? Kasi yung 10% ay sa literary works, musical composition, etc., etc. So, walang ganun naman sa corporation. Hindi siya makakapag-compose. Number 3, interest income from depository bank under expanded foreign currency system. So, yung pinagdepositohan mo ng foreign currency, syempre baka pwede siyang kumita doon. So, it is 15%. Sabi kasi dyan, depository bank. Number 4, cash and property dividends received by a domestic corporation is 0%. So, domestic to domestic, please take note. Received by domestic corporation from another domestic corporation. So, pag hindi na-meet yung requirement na domestic to domestic, hindi mag-a-apply yung 0%. Number 5, capital gain. 6%. Yung gains from exchange ng real property, that is yung land at saka building. Capital, yung ang tax base niya is yung gains. Ibig sabihin, yung gains, yung selling price minus cost and expenses. So kasi gain, please take note, yung gain ang itatax mo ng 6%. So, ulitin natin paano i-compute yung gain, selling price, minus yung cost, at saka yung mga expenses na in-incur sa selling. Yung cost na in-incur sa pagbili, it is capitalized. Number 6, net capital gain from sale of shares of stock not traded in the stock exchange. So, it is 15% na ngayon. So, dati 5 and 10 yun. Ngayon, joke lang. So, yung ibang book, hindi pa na-revise ito, no? So, now, it is according sa BIR, kasi sa BIR ko pala kinuha to, it is now 15%. Itong table na yan is kinapipis ko sa site ng BIR. Hello, BIR. Thank you very much sa materials. So, it is now at 15%. So, pag may nakikita pa kayo sa book na 5 and 10%, yun yung lumang rate. So, nervise na. So, ito na yung pro forma computation uh, ng taxable income, no? Alam naman natin yung taxable income, yan yung ating magiging tax base. Diyan natin i-multiply yung 30% na prevailing rate sa corporate tax. So, dun sa net sales minus cost equals gross income from business, diba? Add other income minus business expenses. Or yan yung pinaka simple na present sa book. Gross income from business, so ibig sabihin nabawas na yung cost and expenses diyan, yung net sales na net na din, natanggal na din. So minus operating expense na lang or business expense equals taxable income. So yung taxable income, ulitin natin, diyan natin i-multiply yung tax rates natin sa corporation na 30% pa rin ngayon. Quarterly and annual income tax return. So, returns, ito yung form na isasabit mo sa BIR. So, dati, when it comes to returns, dati, unlimited ang returns na binibigay sa BIR. Marami silang forms, pwedeng kumuha doon, kahit ilan. Pero ngayon, syempre, naghihigpit na sila, cost cutting. So, ang ina-advise pa nga nila, i-download na lang yung form pag manual pa rin. Pero, I believe, nagkakaroon na ng shift from manual to computerized na. So, madami na rin yung company na minamandate nila o nire-require nila na soft copy na lang, computerized filing, paperless. So, within 60 days after the end of each of the first 3 quarters, so yung quarter 1, quarter 2, quarter 3, magbilang ka daw ng 60 days. para mag-file ng quarterly income tax return. So, for example, yung quarter 1, January, February, March. So, yun, pagkatapos ng March, magbilang ka ng 60 days, mag-file ka ng quarterly income tax return. Yung second quarter, kunwari, April, May, June, diba? Bilang ka ulit ng 60 days, yun ang filing ng quarterly income tax return for second quarter. Kanina ay first quarter. And then, ganun din sa third quarter. Pero may iba na lang yan sa annual. So, pag sa last quarter na, syempre, annual na yun. So, ano na ang rule natin pag annual? On or before 15th day of the fourth month following the close of the taxable year. So, pag nagsara na yung taon, 15th day of the 15th day of the fourth month. So, magpo-close sa normal, magpo-close yung ating period ng December 31. So, fourth month na, 15 days. So, January, February, March, April. April ang fourth month, 15 day ng, kaya April 15, kasi yun ang nasa law. 15th day of the fourth month. So, dyan na magpa-file ng annual income tax return naman. Returns are summary declaration of gross income and deduction on a cumulative basis. So, nakalagay doon yung return, nakalagay doon na yung mga items of income and expenses. So, sinasabi niya cumulative daw. So, sa second quarter, ibig sabihin, i-add mo yung first quarter. Sa third quarter, kasama yung second at saka first quarter. Cumulative kasi, ibig sabihin, ina-ipon. So, ganun. Cumulative dapat. So, walang problema sa first quarter. So, wala ka pa namang i-cumulative. Wala ka pang idadagdag, di ba? So, kung ano yung amount, yun na yun. Pero, sa second quarter, dapat yung amount ay make sure na kasama, na combination ng i-add mo lang naman. Yung first quarter at saka second quarter. Sa third quarter, make sure na yung amount na i-report mo ay first quarter, composed ng first quarter, second quarter, at saka third quarter. And then, ganun din sa annual na. Kasama yung 4 periods. So, RCIT and MCIT, yun yung discuss na natin kanina pa. Regular Corporate Income Tax, RCIT, or sa iba, ang tawag ay NCIT, Normal Corporate Tax. That is yung 30%. And MCIT, yan yung Minimum Corporate Income Tax. So, babayaran mo yung MCIT in the event na mas mababa yung regular tax kaysa sa minimum corporate tax. So, sinabi ko na rin kanina yan na ang RCIT is computed 30% of taxable income, while yung MCIT is computed 2% of gross income. So, ang sabi dyan is whichever is higher is paid. Kung ano nga mas mataas, di ba? Tama naman, di ba? Kasi pag mas mataas yung RCIT, syempre ay RCIT. Pag mas mataas yung MCIT babayaran mo. Excess MCIT carry forward. Yun yung sinasabi ko kanina, pwede mong i-credit, pwede mong i-claim. Yung excess MCIT. Bakit pwede mong i-claim? Kasi ang true na tax mo, ang totoong tax mo naman is yung normal tax. Yun talaga ang tax na babayaran mo. However, it happens na kailangan ng government ng pera, so nag-set sila ng minimum payment. Yun nga yung 2% of gross income. So, kapag mas mataas yung MCIT mo, 2% ng iyong gross income, mas mataas, yun ang babayaran mo. However, hindi naman yun yung tax mo. Ang tax mo lang is hanggang sa extent ng RCIT, Regular Corporate Income Tax, yung 30% of taxable income. So, ibig sabihin, sumobra yung binayaran mo ng tax. So, anong mangyayari doon sa sumobra? Kasi ang tax mo lang naman talaga is yung, ulitin ko, RCIT. So, anong mangyayari doon sa sobra? So, bibigyan ka ng government na i-recover yun for 3 consecutive year. So, for example, nagkaroon ka ng excess MCIP ngayong 2020. Yan. So, kunwari, 50,000 ang sobra excess MCIP mo. Kasi mas mataas yung MCIP mo. So, yung 3 years, pwede mong i-claim yung 50,000 na excess sa 2021, 2022, 2023. So, you have until 2023 para i-claim yung excess. Ano ibig sabihin ng i-claim? Ibawas mo dun sa mga babayaran mong tax sa susunod na 3 taon. What happened kung partial lang ang pagkabawas mo, inatapos na yung 3 taon? Wala na. Sorry, it will be forfeited in favor sa government. So, dapat maklaim mo yun within 4 years. Pag hindi, sorry. Nag-lapse na yung prescription period, yung period na allow para i-claim mo yung na binigay sa'yo ng government para i-claim mo yung excess tax na binayaran mo dahil sa inimpose ng government na MCIT. Ayan. So, aside from yung normal tax, saka MCIT, at saka yung final tax on passive income, at saka capital gains tax, ang corporation ay magbabayad din ng improperly accumulated earnings tax. A closely held corporation is subject to an improperly accumulated earnings tax on its earnings beyond 100% of its paid-in capital. Ayun. So, meron yan computation at rate. So, doon na lang natin i-discuss. Basta merong improperly accumulated earnings tax. So, hindi basta-basta mag-accumulate ng earnings. Kasi this is to encourage yung distribution ng dividend. Naman, para sa mga owners ng corporation. So, yung rules na diniscuss natin is for domestic corporation. So, yun ay mag-apply sa domestic corporation. So, let's move sa resident foreign corporation. So, subject din siya ng normal tax na 20%, pero ang income na taxable na lang ay syempre yung galing sa Philippines. Then, in addition, mayroon din siyang mag-apply din sa kanya yung MCIT na 2%, at saka yung improperly accumulated earnings tax na 10%. So, dati ang history daw niyan is yung mga corporation, since yung pag-distribute ng earnings sa shareholder, dividends ang tawag natin doon, ay subject to 10%, hindi na sila nagdi-declare ng dividends. So, iniipon na lang nila yung income ng company doon sa company. Kaya hindi na sila nagbabayad ng final tax on dividends. Yan. So, since nung nakita yan ng BIR, nag-impose sila ng 10% din na tax on improperly accumulated earnings tax. Number 2 tayo sa Resident Foreign Corporation, International Carriers on Gross Philippine Billing, 2.5%. International carrier, meaning ang ruta ay hindi lang sa Philippines, hindi lang within the Philippines. So, may ruta siya palabas ng Philippines. So, yung gross Philippine billings, ang ibig sabihin lang yan ay yung mga binayaran nilang ticket na nag-originate sa Philippines. Kapag ang trip ay nag-originate sa other country, hindi sa Philippines, hindi na subject ng 2.5%. So, hindi cover ng 2.5% na international carriers tax. Regional operating headquarter of a multinational company on taxable income, it is 10%. Regional area headquarters of a multinational company, exempt naman. So, yung income nila, however, yung income nila ay subject to 10%, yung nasa taas. Corporation covered by special law, rate specified under the respective special law. So, Kapag meron daw special law na kung saan cover ang corporation, then yung special law na yun ang nag-determine kung magkano yung tax doon. Number 6, offshore banking units, 10% pa rin. 10% din pala. Offshore banking units. In general, income delivered by offshore banking unit, ayun, exempt. On interest income derived from foreign currency, it is 10%. Income derived from expanded foreign currency deposit system. So, ito yung mga dollar deposit, yung deposit other than peso, no? So, 7.5, exempt, 10. Yun yung mga rates niya. Sa interest derived by depository bank, 7.5%. Interest derived by depository bank under the expanded foreign currency is exempt. So, pag foreign currency deposit, it's exempt. Pero pag regular, pero yung income, interest income ng depository bank is 7.5%. Branch branch profit remittances, it is still 5%. Halimbawa, nag-set up dito ng foreign branches, so magre-remit siya ng income niya sa head office, so subject ng 15%. Interest from currency deposit trust fund, another similar arrangement, o parang parehas ko din. It is 20%, and number 10, royalty derived from sources within the Philippines, it is also 20% yung other royalty. So please take note of the rates sa resident foreign corporation. Lalabas yun sa exam, paki-memorize na lang. And then let's move to non-resident foreign corporations. Ito yung kanyang tax na mag-apply. Dividends from domestic corporation, final tax na 15%. So pag sinabing final tax, multiply mo dun sa amount ng income, yun na yun. Interest on foreign loans, so interest, 20% pa rin pag interest pa rin kasi. And then taxable gross income niya, it is subject to 30%. So, ibig sabihin, gross income na to Please take note, gross income, ang tax base ng 30% pag non-resident foreign corporation. So, unlike doon sa domestic at saka resident foreign corporation na taxable income. So, dito, gross taxable income doon. Dito, taxable gross income. Gross. So, may difference yun. Taxable income sa taxable gross income. Please take note. So, this is the end of the presentation. So, up next is yung application or yung mga problems na i-discuss natin. So it will be uploaded soon. So thank you very much.